I think that in 30 years, every single equity that's large is a Bitcoin Treasury company. And so Bitcoin Treasury companies will dominate the equity market. And I think that before I started going down this rabbit hole, I held the mental model that like, man, everything is overpriced and all the equity value in the world is just going to get sucked into Bitcoin, and Bitcoin, becomes way more valuable than the stock market. I don't think that is going to happen. I think instead what you will see is that every company is forced over time into becoming a Bitcoin Treasury company, and the relative size of the equity market, at least relative to, say, real estate or relative to other things, stays very large. It stays a really, really large and important part of global capital structure.
Hi everyone, and welcome back to Stefan Livera Podcast, brought to you by Bold. For American listeners, you can buy Bitcoin over at getbold.io. Now, joining me on the show today is actually an old colleague of mine, Reed Wommack. Reed was previously head of customer success support at Swan Bitcoin, which many of you will know. Now, Reed is now owner and CEO of Groundluxe. So, Reed, welcome to the show.
Thank you. Thank you for having me, Stefan. It's a pleasure to be here. Maybe I should start off by just talking a bit through my Bitcoin journey, so folks understand who I am and where I'm coming from.
Sure, yeah.
So I got into Bitcoin in 2019, pretty much right off the lows, got obsessed, went deep down the Austrian and sort of economics rabbit holes, hence listening to lots and lots of your podcasts, rather than sort of the technical rabbit holes. So became obsessed with Rothbard and Mises Institute and the sort of economic background and history of Bitcoin, and was so obsessed with Bitcoin, needed to work in it, and was lucky enough to get a job, pretty well employee number 6 full time, I think, at Swan, running customer support, and scaled that team up over the course of 3 years. So from 2020 to 2023, ran customer support for Swan Bitcoin, and then stepped down from that role in 2023 to spend more time with family, and still obsessed with Bitcoin, and but wanted more time with family. And then in sort of this gap year that I had, spending lots of time with family, got very obsessed with something called grounding, which, for folks who have never heard of it, essentially the idea of touching the earth with your bare feet or with any sort of conductive material is quite healing, especially for older folks, especially for people with chronic inflammation and pain, and got really obsessed with that rabbit hole, and then ended up purchasing a company that sells grounding products. So now we sell grounding products, and on the front end, we are not a Bitcoin company at all. We transact completely in fiat, but on the back end, in the financial side, we sort of run with Bitcoin as our unit of account, and make investments and decisions around allocations to Bitcoin. So I wanted to come on the show just to talk a bit through how we're thinking about allocating capital with the rise of these Bitcoin Treasury companies, and why we're actually not allocating capital directly to Bitcoin, and instead are allocating capital predominantly on our balance sheet to the treasury companies themselves. So essentially,
gotcha.
Buying
leverage on leverage.
Leverage on leverage, yeah.
Okay, so look, obviously, let's kind of, the obvious question everybody's going to have is like, hang on, Reed, this is like antithetical to the, not your keys, not your coins. What's going on? Like, are you like, you previously were working at Swan, like obviously it was a very strong, not your keys, not your coins ethos. Like, have you foregone that? Like,
definitely
why?
Not. For my personal holdings, definitely not. I have not done that for my personal holdings. But when I wanted to run a company, I'll walk you through my thought process of wanting to run a company. Essentially, got to the point where I didn't want to work for anyone else again. Very independent, and thought that my time and energy and vision, I wanted to work for myself, and I wanted to run a company And when I thought through how we would allocate capital, I wanted my company to outperform. I did not, got a competitive streak, did not want to get outperformed by the MicroStrategy's, the Metaplanets, the other Bitcoin Treasury companies. And I am running a very small company. Like, we do less than 10 million in sales. At least last year, did less than 10 million in sales, right? And so, the valuation of my company is small compared to these much larger players. And as a result, my cost of capital is much higher. So if I want to take out debt, and one of the reasons I actually wanted to run a company is so I could legitimately take out debt to buy Bitcoin, speculatively attack USD to buy Bitcoin. If you don't own a company, you can only get personal loans at like 15%, right? If you don't go with personal loans, you get credit cards at 25%. If you run a company, you can start getting down into 8%. So I'm getting offers for loans at 8%. I can do whatever I want with that. Most people can't do that when they're not running a company. And so that's what is attractive about actually running a company. As you get larger and larger and larger, you get cheaper and cheaper cost of capital that you can roll into Bitcoin. Unfortunately, if you're not a public company, you can't get 4%. I can't get 4% interest rates. I can't just easily sell equity either to buy Bitcoin, right? Like some of these larger Bitcoin Treasury companies can do. And so I don't want to underperform them. And so I am instead choosing to take the risk of adding leverage on their leverage, essentially. And we can talk through the risks that I'm knowingly taking, but one way I'm essentially diluting or reducing that risk is just by buying a bunch of these companies. Because long term, many of these companies are going to lose their keys, get hacked, and go to zero. Like, that is for sure going to happen. I don't know which ones, but if you're buying a basket of these equities, companies that are consistently buying Bitcoin, so Metaplanet, MicroStrategy, Semler Scientific, some of these over the course of 20 years are going to go to zero, for sure. And then others are going to outperform Bitcoin, in my opinion. And so when I was just walking through like risk-adjusted reward on how, as Bitcoin sort of volatility gets reduced and people continue to looking for alpha, you can trade options and get wrecked, right? You can leverage up BitMEX and get wrecked. But slowly DCAing into companies that are themselves acquiring Bitcoin, both through positive cash flow, but also through just having access to lower interest rates than the average person can get, to me, is an interesting risk-reward opportunity, essentially, to get alpha on Bitcoin itself. And the way, again, I'm managing that risk is unlike with Bitcoin, where on the base layer you put everything in one basket. It's freaking useless to buy the other altcoin, right? As you move up away from base layer and you start getting into the securitization of Bitcoin, all of those securities are going to have excess risk over just base Bitcoin. And so in a lot of ways, you need to reduce that risk by owning multiple.
Yeah, and I guess up until recently, it was kind of strategy. Previously, MicroStrategy was one of the only games in town there, right? It's only more recently now that, Semler Scientific, Metaplanet, and now, there's a whole raft of these new ones. And interestingly, Nakamoto is probably an interesting one to talk about as well, because that kind of represents almost like a similar thing to what you're doing, right? Because they are themselves a treasury company who are buying treasury companies or starting up treasury companies, and not just in America, but just around the world, because they see it like, actually, maybe there's alpha by going to do, in Japan or in Hong Kong with 1723, that Moon Inc. one, and various ones. Yeah,
I think there's definitely alpha to be gained jurisdictionally, and you're seeing that right now, at least with Metaplanet. They're like pumping like crazy right now.
I guess just for listeners, the date today is the 22nd of May. The price of Bitcoin is about 111,000, and just recently Metaplanet has just been like going through this crazy run where it's like hitting like limit up across different exchanges, and I don't know, it's kind of super crazy volatile. I'm not necessarily endorsing, but that's just what it is. Yeah. Yeah.
But I'm sure in a month or two, things will be back to somewhat more normal on that front. But what you're seeing, at least with Metaplanet, I think in particular, is that they have really cheap cost of capital. Like they could get loans at 0% without even doing, just straight 0% loans.
Yeah,
which you
gotcha.
can't get in the U.S.
One thing I want to sort of rewind back just one step, because I think it would be useful to hear your journey, because obviously in Bitcoin there are different rabbit holes, right? You got the security and the privacy and Lightning and all these other things. But arguably now there's this entire rabbit hole of Bitcoin Treasury Companies, right? Because at the start it was sort of seen like a bit controversial, or quote unquote, you're not a true maxi if you aren't 100% Bitcoin in your cold storage. Whereas now it's sort of there's a lot of interest around this. So I want to hear how you went down the specifically Bitcoin Treasury Company rabbit hole yourself, and then we can sort of get into like how you're doing it yourself, or at least what you're doing.
So before I started getting interested in Bitcoin treasuries, like I was of the opinion, sort of the Saifedean Moose opinion, which is like debt is evil.
Right. Just don't take debt and just stay humble, stack sats, that kind of thing.
Stay humble, stack sats. Do not use debt, and debt is a problem that fiat has produced essentially, and that governments have like enabled this massive expansion of debt. And that was like my view. And anyone who got close to the money printer was evil. Like it's totally corrupting to try and get closer and closer to the money printer. And you see that Jamie Dimon is an evil guy for whatever for running a traditional bank that gets bailed out by the government. That's like one view, and I think it's a legitimate view of many Bitcoiners. And then sort of how I came around to it is just the same way I came around to Bitcoin initially. Is like, why is this working, at least in the short term? Like, why is Bitcoin going up in the short term? And the volatility, the upward volatility, draws you in. And so that drew me in, and then went on Bitcoin, made me go down the Austrian economics rabbit hole. And then watching MicroStrategy essentially take on tons of debt to buy Bitcoin drew me in, and it's like, why is this working? Why are they outperforming Bitcoin? And do I need to like reconsider my mental models to better reflect reality, which is that someone who is taking on debt right now is clearly outperforming Bitcoin on the base chain. Clearly they're taking on risk, right? Absolutely taking on risk to do so, but why is it working? And that question made me look more deeply into debt, and how debt works, and made me reconsider a little bit the narrative around debt being purely evil. That instead, if you look at it the same way Michael Saylor's described it, as essentially like capital flow and moving capital that is locked or underperforming from people who are low risk, who want consistent payouts at 6%, into something that will generate far higher yields. Bitcoin CAGR is 20-25%, say, annually. Like that is a massive arbitrage opportunity, and that's actually a natural arbitrage opportunity for someone who is willing to take on more risk, to get loaned capital, to invest it in ways, or to allocate it in ways that will get high returns, and someone else to be senior in an equity stack to then who wants low risk, but they want 6% returns. And those people exist. There are lots and lots of people who don't want all the volatility. They just want 6% returns. And debt allows those two parties, higher risk and a lower risk party, to interact and to have a mutually beneficial exchange. And so it's not that debt itself is deeply problematic. It's that the debt markets have been dominated by treasuries.
Interesting. And so I guess one other quick question I have on treasury companies, because there's a few things I want to get into, but let's just start with this one. On this idea of doing Bitcoin treasury companies or buying them, what's the difference between, I guess, instead of you taking out debt to buy them, just buying MicroStrategy or just buying MetaPlanet, just without using debt, without doing leverage on leverage, just buying those?
Yeah, well, you're still, so, in the leverage stack, buy Bitcoin, least leverage, most safe, right?
Yeah.
Next layer up is just buy an equity that is essentially wrapped Bitcoin that that they themselves are doing this playbook.
Yeah.
Right? That is one layer up, and you have one more set of risks associated with that. And then the third layer up, which is the one that I'm sort of playing around with my personal company treasury, is essentially taking the same playbook that middle group is using, the MicroStrategy playbook, and applying it to MicroStrategy. So cash flowing into MicroStrategy, and then taking out small amounts of debt, maybe at 8% long-term debt, and buying those companies. And so it's a third layer that is even riskier. And again, I'm going on this podcast. Not many people are doing this. Many people are going to just write me off and be like, "That wow, that's way too risky." And you're probably right. It's a fascinating securitization of Bitcoin that's happening, and I want to be a part of that in some capacity, which is
interesting.
And so
let me just summarize a few.
Everyone can do this. I'm just suggesting, like, as Bitcoin gets institutionalized, there will be increasingly more and more companies making decisions, maybe somewhat similar to mine, or offering things like ETFs that are actually Bitcoin Treasury companies. Because the current Bitcoin ETF is includes Tesla or something. It's like, that's not actually
right. You mean as in an ETF that only does the leveraged Bitcoin equities, not just the non-leveraged Bitcoin Treasury companies.
Actually buys securities or companies that are increasing their Bitcoin stack and are doing this playbook of taking out cheap debt, buying Bitcoin, cash flowing into Bitcoin, and selling equity when you have an MNAV of above 1 for Bitcoin. That is sort of the 3-part playbook that is interesting to me in companies that are doing. And if you aren't doing those 3, then for me at least, it's not worth looking at those companies.
Back to the show in a moment. This show brought to you by CoinKite.com, the creators of the best Bitcoin hardware security devices, such as the Cold Card Mark IV and the new Cold Card Q. Now, we use Bitcoin hardware security devices to keep our keys offline, our private keys offline. Now, the way these work is you can do that setup, write down your 12 or 24 words on the seed word cards, and keep that secure. Now, you can use this device to interact with the Bitcoin network using software such as Sparrow Wallet, Electrum, or Vector Desktop, or Nunchuck as a few examples. Now, you have a range of security features that you can use with these devices, such as passphrases. You can use seed XOR, or my favorite is multi-signature. Now, if you're starting in a basic way, just start with the device and the USB-C cable, plug it directly to the computer and use it that way, and then later improve your setup. But I believe these devices are great at helping secure your coins, especially as you start to migrate up into multi-signature security. But don't be disheartened or don't be scared away. They are accessible, and I think you actually do learn about Bitcoin in the process. So to get yours, go to coinkite.com, use code Livera to get a discount on your cold card. This episode brought to you by Galoy. They are building banking software for the Bitcoin age. So if you are with a bank, a fintech, or a startup looking to offer some kind of Bitcoin product, whether that is a Bitcoin collateralized loan, deposit accounts, or payments, Galoy can help you. Their latest product is called Lana. It is a loans management platform, and you can use this to come to market quickly and offer a loans or Bitcoin collateralized lending product for your customers. Now, Galoy have a lot of experience in the space. They started with Blink Wallet in 2020, and they've since grown this to become a community favorite over time. And so they have a lot of experience making things work in a secure, reliable, and scalable way. So if you need assistance coming to market quickly with a Bitcoin banking product, such as lending or deposits or payments, talk to the team at Galoy. You can email them. The email is biz@galoy.io, or go to the website galoy.io. And now back to the show. Interesting. Okay. And so, yeah, we'll get into a whole few things, but I guess one thing we're kind of touching on is, let's say there's this kind of universe, like let's say you're a Bitcoin maxi, right? Like you believe Bitcoin is going to be the money of the world, as you and I and basically
yes.
SLP listeners believe. Then you've got this universe of risk, right? Like on the safest end is just literally, multi-sig, self-custody, stay humble, stack sats. Maybe on the crazy, way out there is, go to BitMEX and go 100x long. And then there's gradations
between those.
All between that, right? So as an example, maybe one step up would be like, okay, just use, the likes of like an Unchained or a Ledin or one of these lending providers to kind of just borrow a little bit and, take a little bit of leverage, maybe like 5 or 10% kind of, that would be sort of maybe one level. And then like, or buying, maybe having some of your portfolio, either personally or business portfolio in some of these treasury companies. And then I guess what you're saying is, yeah, go on.
So one of, like, you're presenting this as this like scale that's a two-dimensional scale. It's not necessarily two-dimensional because I actually personally would never recommend people take out loans to buy Bitcoin when they post Bitcoin as collateral, because Bitcoin is still incredibly volatile, and you can and will get nuked on that. Like Bitcoin crashes, you get liquidated, and all of the Bitcoin is gone.
And that's a fair point around the liquidation. So you see it like the treasury companies don't have that liquidation risk.
They do not have that liquidation risk, and I look at that as a higher risk. So I'm not willing to touch like that type of a risk profile.
Gotcha. Yeah, and that's a fair point. But then even if you are taking out, let's say you're taking out business loans, even at 8% to buy MSTR, Metaplanet, and so on, what kind of term is that loan? What are the conditions of that loan? Like, how does that work?
So, like, as you essentially build this company, you get better and better terms, and you can take out debt longer and longer at lower and lower interest rates. And so if you take out credit card debt, like, you might be able to max your credit card and get a year at 0% interest rate, but you're limited on how much you can take out, maybe $30,000. But then as you build a company, you get better and better credit profile. And so I think right now I can access 8%, like a $500,000 loan at 8%, let's say. And that's a multi-year loan. And that loan is not based, I'm getting that based on sales. I'm getting that based on my balance sheet, but I have time to pay that back with cash flow from the company, if that makes sense.
I see.
And so I'm not posting collateral. Like, that's a really important thing that I think MicroStrategy is doing well. These Bitcoin treasuries are doing well. And also, like, I'm trying to replicate is like, there is no liquidation risk because I have just time to pay it back with cash flow, not posting collateral. And if MicroStrategy goes down 50%, I'm going to be liquidated. Like, I'd never want to take that risk where if price moves against me, I get loans closed out early or I'm liquidated. Right? And so setting up loan terms in ways where that is not a risk is really important to me. Because I know MicroStrategy could absolutely crash 50% tomorrow. Bitcoin could easily go down 30% within a week or two, right? So I don't want to be in that position where I'm a forced seller at the lows.
I see. And so how many, I guess, cycles of kind of rinse and repeat have you gone through, or are you just early stages of this?
We're still early stages. But yeah, I think we have four or five companies that we own on the balance sheet, and essentially, so far as Bitcoin has gone up, they pump at different times or whatever. Doesn't really matter. I don't really care on the short term because this is, again, not a play. I'm not trading these. I'm not like, I don't care in the first 6 months. In the first 2 years, it doesn't matter. This is a 4-year play or 4+ year play around.
And so can you share like when you started this strategy and how you've gone so far?
Totally. I started this, I took over the company in February of 2025. For the first few weeks, I needed to just buy inventory. So we had no cash flow. Essentially, everything was going into inventory, and then we started making money that I didn't have to put into new inventory orders. And since then, I've just been DCAing into a variety of different companies. So Metaplanet, SMLR, MicroStrategy, and 21 have been our holdings so far, and just DCAing in.
Gotcha. Yeah. But admittedly, this is very early days, and
Totally.
you need to sort of make it through. Yeah.
Yeah. And also, like, everyone's a genius in a bull market, and like,
exactly. Yeah. That's exactly what I was about to say as well, right? Because that's our natural tendency to think, oh, see, I'm a genius. etc. Right?
Yeah. And like, so if I look at, how the performance is in the last 2 months, like, yeah, I'm up, great. But really what matters and what I care much more about is my mental model for these treasury companies is like they are able to essentially go higher. They're 2x leverage on the up, and they're like 1.5 leverage down. And really what you care about is just whether the base is higher. The Bitcoin per share and the share price is higher on the next bear market than it was, on the past bear market. That's what's more important to me than like, whatever these vertical lines are doing in the short term and what the traders are doing, pushing things around. Like, what matters is whether they're able to accumulate more Bitcoin per share, and that results in outperformance of Bitcoin over long time frames. And
Okay.
MicroStrategy has done that at least over the 4 years. Like they've proven the model at least for one cycle, and now there are lots more companies trying to copy it for this next 4-year cycle.
Of course. And the important thing with some of these treasury companies as well is when they get debt, they term it out. It's like 5 years out or 6 years out or whatever. And they're kind of doing more, let's say, fancy things with, how they manage it.
Mm-hmm.
I guess I'm curious. So when you're saying leverage on top of leverage, are you at the point where you have already taken a business loan to buy more?
So currently,
or
no.
not yet?
Like the way I look at the progression of what Bitcoin Treasury companies are doing is like first stage is you take all your free cash flow,
Yeah.
and you buy Bitcoin with it, and that is a great stage. And you need that stage in order to sort of move on, I think. And that's the stage I'm in. And then the second stage, which I'm about to enter, in June or something, is you start taking out long-term debt at low interest rates that are lower than Bitcoin's CAGR, like compound annual growth, and you sort of roll that in. And that's stage 2. And then the third stage that larger companies can easily get into, which I cannot, but I will likely one day enter this stage, is selling equity in order to buy hard assets. And when MNAV is over 1, this is accretive to your shareholders. And my opinion on that is that that's the most powerful thing you can do. Like you are literally the money printer at that point. You are just like sucking in capital and allocating it to a harder asset. But that only works when you have at least one of the other two also functioning. Because if you just try to immediately issue equity to buy as much Bitcoin as possible, and you don't have cash flow in or you don't have debt in, then you will like crush your share price, and shareholders will look at you and be like, well, there's no point in investing in this equity because they're not going to generate more Bitcoin in 2 years for me than I would.
You mean if you're not a public company?
No, if you're not.
Even if you are.
Even if you are, you need to be doing at least one of the other two, either debt or cash flow. And if you aren't doing those, then forward-looking investors will say, like, you're not going to be able to actually increase my Bitcoin per share.
Right.
And like, you will crash. You'll crater. You will just like sell equity down to 1 MNAV, and you will never be able to get above 1 MNAV again. Is my mental model, at least, for why you need to either cash flow or cash flow and debt.
Gotcha.
And then you can unlock that third, like, great, we're going to just like sell a bunch of shares and buy Bitcoin with it.
Yeah,
which is
yeah.
the most powerful leverage in that
Right.
stack. But you can't just do that.
Right. It's not just equity. And generally speaking, all these public companies are looking both on the equity and debt side, right? Like that they are going to issue, find investors who are interested in that company's debt, and that's where they, this terming it out 5 years or whatever, and ideally with favorable terms, with low interest rates, this kind of thing. But I guess the challenge is first getting to that size and scale. Okay. But I guess how much of because I guess when you take out business loans, let's say as Groundluxe, the company, not as Reed, the individual, how much of that loan money is needed to actually sustain the business, or is the business already profitable on its own, right? Because is that also distracting from your kind of ongoing operating business?
Yeah. The business is already profitable on its own.
Gotcha.
As a bit of background, e-commerce businesses like the one I'm in, they tend to have really seasonal cash flows. And so even before I took over, the previous owner would take on debt in the summer. You essentially buy a bunch of inventory over the summer, and then Black Friday hits and you sell all of your inventory, and then you're sort of cash rich in January. And so that's the cycle that's common, at least with normal debt. And so I'm sort of still on that. Like, I'm going to have to take on debt just to fund these cash flow cycles, at least at first. But we're also going to be taking on longer term debt, if that makes sense.
I see.
So normally e-commerce companies will take on 6 months, take out a 6-month loan in July, buy a bunch of inventory, pay off the loan in December, January. That's a common occurrence, at least in this industry.
I see. And so what kind of, I guess, time frame are you sort of looking at here? Like you mentioned earlier, it's kind of 4 years plus.
Yeah.
What's the time frame that you think you're going to operate this on? Like, are you planning to then, let's say, rinse and repeat again in 1 year from now, like in May of next year, or what?
Yeah, my rough mental model is there will be a Berkshire Hathaway of Bitcoin Treasury Companies, right? Where you have these large holding companies that don't sell frequently, and they hold for a very long time, and as a result of not selling, they don't have very much capital gains tax to pay, at least in the US. And that is what I want, is to be that for Bitcoin Treasury Companies. And Warren Buffett did that with insurance companies, right? That was like his start, but now he owns a whole range of them. And if we just focus on Bitcoin Treasury Companies, only Bitcoin Treasury Companies, and I talked about having this 4-year hold term, but really, like, it would be nice, and I'm planning on like a 20-year hold term. So I buy it, and in 20 years, I think 3 of my 5 companies that I'm buying are still going to be around. 2 will have screwed up. Of those 3, 1 will probably match Bitcoin, and 2 will have.
I see.
That's like roughly the risk profile that I'm taking. Is like it's more like, it's not quite as risky as venture, right? You're not like 1 in 100 unicorns. It's more like the risk. It's more like small cap investing, and the risk profile is around small cap investing.
And so when it comes to
you bake in, like, you're going to have these companies that just like screw up key management and lose their Bitcoin, or get sued and like go under. And that sucks. It's going to happen. But you will also have companies that just outperform so much that they cover for those companies.
Yeah, the losses. Yeah. But also on the question of like loans and the cycle time there, are you going to be like paying down that loan? Are you going to deleverage that? Like, how does that part of this work?
So at least at like small scales, right? We are paying down that loan, with cash flow from the business, right? But what you see with larger companies is they essentially just take on more and more and more and more and more debt as their credit profile improves, and they just take on larger debt to pay off the older debt. So long term, like, we will likely hold lots of debt, right?
But then, I mean, doesn't that also create the higher your leverage ratio goes? Like, as an example, you correct me if I'm wrong, but with MSTR, I think they've publicly said they want to keep that ratio something like 20 to 30%, something in that range.
Totally.
Like, and I think that's kind of like MNAV, kind of calculating for like the amount of Bitcoin, the amount of debt they have over sort of the amount of Bitcoin, taking out the equity dilution and the debt they have. I think they want that ratio to be in the 20 to 30% range. So if you're saying you're just going to keep, like, are you saying you're just going to keep the number going up?
Keep going. It doesn't mean that like the amount of debt relative to our balance sheet goes from 20% to 500%. It means that as the balance sheet grows, the amount
So
of
the
debt,
nominal fiat debt terms
Nominal
grows, but the
fiat debt
percentage of your balance sheet,
yes.
do you have a ratio? Do you have a target ratio for that?
So not yet, in total honesty. I think one of the things I'm watching is how the second, as I talked about those three layers, right? You have Bitcoin, you've got the second layer of these treasury companies, and I'm maybe considering myself the third layer on top of those, is what they are doing. Because we're going to probably match in some capacity what they're doing. And so MicroStrategy is I would say middle of the road in how aggressive they're being. 25% is actually like they're well capitalized and lower risk. And then other companies are going to be higher or lower than them. And I that's probably the right amount.
So you're going to sit at a similar leverage ratio to them?
Probably, yes. The difference is they essentially, like, on the pumps, they get massive amounts of investment into Bitcoin. They sell their shares and buy more Bitcoin. And then on the bear markets, they aren't able to do like anything. Like capital dries out. They can't issue at the markets. They can't raise at those amounts. And so that cycle of like being able to buy on the up and like be unable to buy on the down is something that we need to be well aware of so that we don't match that. Because if I'm like going all in right now, as things are pumping, like that is too much leverage for, and instead the leverage we add needs to actually be, I need to be able to sort of like, when things are low, that's the time, where we're going to be trying to take out more debt to buy more Bitcoin. Right?
So then I guess that brings up the question, are you trying to time the cycle then as well? Not that I'm totally against it, but is that essentially what you need to do this successfully? Or do you see it doesn't require you to time the cycle correctly?
Like you can just DCA, right? We can just absolutely DCA and it'd be fine with this strategy, right? It's just when you take out debt and my debt terms are 2 years, it is important if I take out debt on a 2-year time frame that I don't put it in at really dumb times. Does that make sense?
So it kind of makes sense to do it like...
Once you have a 4-year term, doesn't matter. Once you have an 8-year term, doesn't matter. When you are taking on leverage on shorter time frames, it matters. Like you accidentally buy the top on a 2-year.
Yeah, then you're in trouble.
You're in huge trouble, right? And so like as the business grows, like we can get longer and longer terms, but I just can't get, a 5-year term right now. If I did, great, I'd DCA in. But if the max I can get right now is a 2-year term, then if I want to take on debt, you sort of have to wait. I would probably wait until Bitcoin is down 50% or something, or 30% or something, where I'm,
because buying now at all-time highs could be
a bad idea. I mean, on a 2-year time frame, on a 10-year time frame, absolutely. So the DCAing in, like, it doesn't matter it does not matter when you buy it if your hold year is, hold time is long. But if you're leveraging with a 2-year time frame, it does matter.
Are you, like, so far we haven't really spoken as much about the concept of, if you're a Bitcoiner, you believe Bitcoin is the money, are you going to take profit back into Bitcoin? Like, if Bitcoin is the money, are you going to take profit back into Bitcoin?
Yeah. So that long term, yes. Long term. And I am in also increasingly thinking that the timeline for Bitcoin being like money, like payments money, is going to be very, very long. And that
are we talking 2 decades, 3 decades? What do you think?
Yes. 2-3 decades before it's really payments. And so whereas Bitcoin as collateral, Bitcoin as sort of pristine asset, that will be, in my opinion, the dominant narrative
for the next 1 to 2 decades. Yeah. Okay.
Sure, there will be places where where you have really poor payments infrastructure where it's useful for payments, but the vast majority of Gresham's law, good money gets driven out. Like the vast majority of people would prefer to hold Bitcoin once they really understand it, rather than to spend it. So, yeah.
So I think my main, and then I guess if you are viewing yourself as let's say a mini Berkshire Hathaway, and you are selecting
we are tiny. I'm not actually
okay, but I mean the principle is that you are, let's say you are a Bitcoin Treasury company who is, you are a Bitcoin Treasury company.
Treasury company.
Right, which is, I guess, leverage on top of leverage. But what is going to be your selection criteria then of like which ones are good, which ones are bad?
Totally.
Like, are you intending to just kind of go for all of them, or to kind of the best one or two in each country, or do you have a strategy on that?
This is a great question, because we are seeing so many pop up now. It was just MicroStrategy for a while, then it was Similar Scientific, and then Metaplanet, and now I don't even know how many have claimed that they are. But really what I think for me, the selection criteria is that you have 6 months of consistent purchasing of Bitcoin, and you have marketing or messaging showing that Bitcoin yield is really important, and that is what you are trying to maximize as a company. So like Bitcoin yield per share.
Gotcha.
And you have 6 months.
So for now, the main companies I can think of who meet that, so MSTR, Metaplanet, Similar Scientific, 21, Nakamoto, I guess that David Bailey one, the blockchain group in France. I think there's one or two in the UK.
Yeah.
So I guess those are off the top of my head, and there's probably many more that are kind of
I spend 95% of my time thinking about like running my business for right now, and over time that's going to change. As the balance sheet becomes more important, to more and more time thinking about allocation. But essentially, I can't get sucked into like whatever new Bitcoin Treasury company just launched and said we're going to be the next great thing. Like you need to prove out, for 6 months that you're like actually allocating to Bitcoin before it's interesting to me.
Yeah, that's totally fair. But then the other question and challenge would just be, look, Bitcoin, now we don't know what the future holds, but at least historically, we've had these 4-year cycles, and there's kind of only been this short period where it's been this big number go up, right? Like kind of 2013, 2017, 2021. Like if you're waiting for 6 months, then does that mean they've already done a lot of their buying and now you've sort of missed the entry on them? Or you've missed a good entry on them?
Like do you think there's like one more pump or something? like if your
don't know.
If your time scale is like I'm expecting Bitcoin to go to the moon in the next 6 months, then you take a very different strategy than the one I'm taking. Like
I know. I mean, I see it like it's probably a 20-year, 30-year process going here, right?
Well, with that 20 or 30-year process, my mental model at least, and people can have very different ones, but the reason I'm choosing this is I'm thinking that the compound annual growth of Bitcoin is going to sort of get reduced as it gets larger. And so you are not going to have nearly as much volatility on Bitcoin in 10 years as you are having now, right? Like it will become, the compound annual growth will like slowly go down.
Right.
And because of that, you're not going to have nearly as big of ups and nearly as big of downs. And over long time periods, Bitcoin will keep going up, and companies that accumulate Bitcoin consistently will keep going up. Like that's roughly.
The lead sponsor of this show is Bold, the best place to buy, sell, and save Bitcoin. For listeners in the US, Bold lets you secure your financial future with complete peace of mind by integrating a low-fee, Bitcoin-only brokerage with next-gen multi-sig vaults. With Bold, you can smash buy Bitcoin or set a DCA plan for only 0.99% fees and seamlessly deposit the Bitcoin direct to your Bold Vault. The Bold Vault is a 2 of 3 collaborative multi-sig where you hold 2 keys and Bold holds 1 as a redundant backup, protecting against loss or theft. You can use Trezor, Ledger, or Coldcard hardware wallets to spin up a Bold Vault in just a few minutes, and the Bold Vault is the only collaborative custody vault available with 0 monthly fees. They're also offering 0 fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Try Bold today and upgrade your stacking experience over at getbold.io. And now, back to the show. Yeah. I mean, I guess what I'm getting at, though, because, I mean, I agree. I think it's going to taper down over time. I think the power law or power curve stuff kind of gives us an interesting kind of benchmark or baseline of where things are going, but it doesn't mean that's exactly how it's going to go. No. And my question is more like, because at least at the start, you've got a 2-year term on your loan. And so if, you get unlucky with your timing, then you might not be in a place where it's recovered yet in that 2-year time frame, because on the 2-year loan term. Now, if you've got 4-year loan term, 8-year loan term, okay, it's not as big of a deal, right?
But if you don't have a cash flowing business and you take out a 2-year loan, you are forced to sell whatever you bought with this loan to cover the loan. If you have a cash flowing business, then the cash flow from the business covers the loan, and you end up with less than what you had before than you would have had you not taken out the loan in the first place. But you are not being forced to sell from your balance sheet, if that makes sense.
Gotcha. Okay.
And so that cash flow of the underlying business is important, at least at the scale I'm at with these shorter loans, to be able to make sure that I never have to sell whatever it is that I buy onto my balance sheet. I never am a forced seller.
Okay, right? Yeah. And so that's also interesting because that's kind of the big thing that people are talking about, like, are all these treasury companies, are they going to cause the next bear cycle? Is it going to be, some event? I mean, none of us knows, but is it that there's this sort of temporary craze for treasury companies, and that, let's say, as an example, that their MNAV goes very artificially high right now, or not, like, let's say temporarily high. Like there's this, I guess the theory might be, okay, there's a small window in which these MNAVs will really shoot up, and it's going to compress down a lot over time. Yeah. That's definitely that's possible. I think the reason why the MNAVs, I think in the long run, will remain over 1 is that they have access to cheaper capital than the average person, and so that is leverage that the average investor does not have. And so because of that, they can accumulate Bitcoin faster than the average investor. And so if an investor is forward-looking, that MNAV, at least theoretically, should remain above 1. I think when you talk about the potential for them to cause the next bear market, it is real, because what could happen is, MNAVs compress, some of them go below 1. And then it's actually, if you are strictly following like Bitcoin yield as a KPI, it is in the company's interest to sell Bitcoin and buy their shares back. So the reverse will happen of what is happening on the ups, which is on the up, they sell shares and buy Bitcoin, and that increases the Bitcoin per share. And then on the down, if their MNAV goes below 1, and I was looking at a small company called Genius Group, and they're, an educational AI company, and they bought a bunch. They said they were a Bitcoin Treasury Company. They bought a bunch. Their MNAV went below 1, and then they sold their Bitcoin to buy shares back, right? And so yes, like, so it can send a bad. So that's bad in 2 ways, right? On one side, investors may view that as a quote unquote broken promise, even if theoretically it makes sense. Yes. Even if theoretically their Bitcoin per share has gone up, it may be seen as like hold on, I thought the deal was you never sell Bitcoin. Exactly. And so some investors will be like, hey, that's a no-no, right? Yeah. And then... I think different companies will probably treat this differently. Like, I think based on what I've seen of Michael Saylor is like, they're, even if their MNAV compressed to below 0, they would just like wait it out or try to, cash flow their business intelligence business to buy more Bitcoin, or, but then other companies are
who are purely focused on Bitcoin KPI, Bitcoin yield, like they may sell and cause like the bottom of that bear market.
And then that may be the kind of the FTX bottom equivalent of next cycle, right?
What is important to recognize about these companies, I think, is that they will help boost price and they draw capital in on the way up. And then when Bitcoin turns and goes down, they are going to be unable to put in the bottom well, because they will not have high MNAVs at that point. They will not have good debt terms. Anyone who wants to give them debt will be like, absolutely not. Bitcoin has gone down for a year. I'm not going to give you more debt. That's a terrible idea, right? And so and you saw this with MicroStrategy. Like MicroStrategy has accumulated a ton of Bitcoin in the last year. During the last bear market, they did not at all. And so, that's something I think.
Yeah.
That,
I mean, they were stacking, but just less, right? A lot less.
So much less. Yeah, because they're not able to use those levers that sort of show up in bull markets, which is, the selling equity to buy Bitcoin or taking out lots of debt to buy Bitcoin. Those are much easier when, there's euphoria. And really it's like it comes back to cash flow during the bear.
And what do you make of, so again, I know you've said you're not spending a lot of your time on this, but what do you make of some of these other instruments? So for example, with MSTR, they have STRK and STRF and some of these other things, like it's not just equity now. They're doing other,
shares.
Yeah.
This may be a strange opinion, but I don't love the preferred shares because they are a promise of a dividend payment. And that is very dangerous to be in. It's very dangerous to have to promise to give a 10% dividend. Like if you take out debt, MicroStrategy take out debt, a 3% dividend is much safer, in my opinion, or 3% dividend, but really it's just debt repayment, than a 10%. And so I'm not enthralled with the preferred shares as a component of that equity stack, actually, because if Bitcoin does have a long bear market, MicroStrategy is going to have to sell equity and crush their existing shareholders to reward
to pay the STRF and STRK holders
who are senior in the capital stack, and that is slightly unsettling to me, at least. It's much more comfortable if it's debt, because that debt is very cheap, whereas a 10% dividend is very high.
I see. And I guess the point would just be if it happens during a bear cycle. I guess I haven't really thought deeply enough about it or kind of understand all the aspects of how this works, but maybe, I guess it's kind of relying on the idea that, it's kind of relying on the idea that, Bitcoin CAGR is going to be high enough longer term.
Higher than 10%. Sort of the theory.
That's kind of the broad idea, but in a bear cycle, maybe that's kind of, it gets a little more tricky because who's going to pay for that?
Yeah. Yeah. And it will be the equity holders if they're unable to raise like additional debt, which would happen during a bear market. Like it will be very difficult to raise debt to pay off your preferred shares in that situation. So I'm not like enthralled with that as a part of the capital stack. But I'm also, like we're diversifying into a bunch of different equity companies, and they're going to have different capital structures, and I hope
some structures will win, some structures will lose. So be it.
Yeah, some structures will win, some structures will lose. Exactly. I hope that many companies don't take that, but I could be totally wrong, and it could be a really useful part for MicroStrategy. I definitely know Michael Saylor is a lot more intelligent than I am. So
yeah, I mean, as I understand, part of the way he's sort of, at least from watching one of the earnings calls, I think the way he was promoting the idea, or at least talking about it, was showing like this BTC talk kind of idea, and I guess it's this idea that they could accumulate more Bitcoin now, because the more Bitcoins that they get now is going to be worth so much more in 10 years time, that a lot of the gain is coming, when those extra Bitcoins that you acquired, now in 10 years time, they will have, compounded up to so much more. And I think that was kind of how I understood it, at least, that it was being seen as a less dilutive thing for accumulation.
I mean that. Yeah. It's gonna frame.
But I guess it just comes back to the bear market thing, right? Like, how bad does it get in the bear market? Like, would they actually be unable to raise in the next bear market? Or maybe there's like a broader shift in credit and debt market thinking, and maybe more people actually do go for Bitcoin Treasury Company debt, even in a bear market, because it's understood that government debt is so bad, as an example.
Yeah.
So I mean, I it's an open. I don't really know. And I guess from your perspective, how big do you see this market becoming? Like, do you do you have a rough estimate or a thought there?
I mean, I think that in 30 years, every single equity that's large is a Bitcoin Treasury company, and so Bitcoin Treasury companies will dominate the equity market. And I think that before I started going down this rabbit hole, I had the mental model that, like, man, everything is overpriced and all the equity value in the world is just going to get sucked into Bitcoin, and Bitcoin, becomes way more valuable than the stock market. And that is not, I don't think that is going to happen. I think instead what you will see is that every company is forced over time into becoming a Bitcoin Treasury company, and the relative size of the equity market, at least relative to, say, to real estate or relative to other things, stays very large. It stays a really, really large and important part of global capital structure.
Yep.
It's just that rather than everyone pricing their earnings in dollars, they price them in Bitcoin. And so when you say how large can this get, this can get as large as the stock market. This is the way the stock market is going to go in 30 years.
Yeah, but I mean, it's also that depends how you see it, but is Bitcoin going to suck a little bit out of each different, like a bit out of equity, a bit out of, bonds and debt, and a bit out of physical property?
Is what I'm sort of thinking is like, I still think real estate gets wrecked by Bitcoin comparatively. And that overall companies that don't adopt Bitcoin will get wrecked by Bitcoin. And eventually the Bitcoin will sort of eat into all the companies that are not adopting Bitcoin, and then the companies that do will sort of keep level with Bitcoin or slightly outperform. So, so it's not going to like reduce or the size, the relative size between the stock market and Bitcoin. Bitcoin is going to grow alongside it, but the importance of the stock market globally as being a predominant place of people to store value and to invest is not going to go away. It's not that Bitcoin is going to fully replace that.
Of course, yeah.
People will still want to take on different types of risk with different types of securities. It's just that risk will be priced in Bitcoin rather than be priced in dollars.
Yeah. And I mean, the way I'm seeing it, I think I agree with you. I think it's sort of like there's going to be this just, the fiat expansion is going to continue for the next 20 or 30 years. Yes. And a lot of these things are still, they may well go up in fiat dollar nominal terms, but go down in Bitcoin terms. And that's really what, what really matters in 20 years time or whatever.
Mm-hmm. And my thesis around the stock market is it's going to, as a whole, probably in the next 10 years, next 5 years, will go down in Bitcoin terms. But there will be these companies that will outperform Bitcoin.
Right. And that's again why you're buying them, right? That's why you're doing this whole thing. Yeah.
Yeah, that's the thesis I have. I could be totally wrong. Like I said of the 5 I bought, I expect 2 to totally go under, 1 to keep pace, and 2 to outperform. Like those numbers could be off. I don't know, but that's the risk I'm taking, and I think the risk reward at least is worth it for where I am, at least in my life.
Yeah, right. Okay. So I'm just trying to sort of think through like what are the real ways that this kind of strategy could fall down.
It goes down a lot of ways. Like we are 2 layers up on risk.
Yeah. Exactly. And I think that at the end of the day, like it just comes back to the same thing. We mentioned this earlier that, everyone feels like a genius in a bull market, like in 2017, there were people buying random, whatever shit coins. I didn't get into shit coins, but there were people just buying random shit coins, and people were joking about like, oh, you made 40%. I made like 40x, right? Like that's kind of, people were that kind of, and obviously the party finished December 2017, and then it was, a bear market for a year. And I just wonder what's that going to be this cycle, right? Like what is the equivalent of that, and how do you make sure you survive a bear market and make it through to the next, make it through?
Yeah. And I think like that's something I'm thinking a fair amount about right now.
Yeah.
And like your questions around like, man, if you have a 2-year loan and you're buying the top, it's like, yeah, the safe approach here is just DCA. The safe Bitcoin Treasury Company approach is just DCA into those, and like don't take out any debt that's near term, right? And that is probably going to be our heaviest or our largest pillar of this strategy. At first, is just like DCA until we sort of prove it out, until our credit improves and we can get longer cheap loans, and then we can start sort of doing that full playbook. But you're right, like if I take out $500,000 and buy Metaplanet right now, like
yeah, I mean, it could go half the next day, or it could go up 2x the next day. I mean, who knows at this point?
Yeah, I'm not. I think that would be a really silly idea, personally. But yeah, that capital management on a Bitcoin standard, if you're trying to get alpha, is not nearly as simple as just DCA completely into Bitcoin, which is, I think, the safest approach, but not the one that will ultimately provide the biggest upside, I think, if that makes sense. It is.
I think in some ways,
by far the safest,
yeah.
though.
And I've heard Checkmate, right? You might know him. He's an Australian, one of the guys doing like on-chain analytics and stuff. He made an interesting point, and I thought it was an interesting way to put it. He said, buying some of these Bitcoin Treasury companies, it's like getting the Bitcoin in 2013 experience, right? And I think there's something to that.
There is more volatility there. That's part of what drew me in. I think that's part of what draws a lot of people in. That volatility can like, yeah, it's very attractive to some types. It can also like make you so high time preference and just wreck you, right? Everyone who was like, and I sort of got sucked in by the MicroStrategy run up in November of 2024 of like, oh my God, they can just keep selling equity and keep buying Bitcoin and literally like do this on repeat forever. Like,
yeah, or at least 20, 30 years until we hyper Bitcoinize.
Yeah. And then it evens out that, and they stopped buying as much Bitcoin for like a few weeks.
Yeah, or buying, it won't be as feasible, because maybe by then these treasury companies will become banks or insurance companies or some kind of financial service company, and they're making yield by lending out Bitcoin or something. Like they just become a bank, but under a Bitcoin standard. That may be the likely outcome.
That is the likely outcome, I think, is that they become the banks of the world, and banks don't go away. Banks do serve a very useful purpose, I think.
But then at that point, you would become a holding company of banks.
Yeah, in the same way that Berkshire Hathaway is a holding company of insurance companies. Yeah.
So it's an interesting. Yeah, I guess it's kind of. So, who would you like? Would you say this kind of strategy that you're applying, who is it applicable for, and who should be like, hell no? Is it like if you're obviously this is kind of like a very out there strategy, a very aggressive strategy.
It is a new and aggressive in some ways strategy. I mean, I wouldn't recommend anyone take out deep amounts of leverage to buy Bitcoin. The safest strategy is to buy base layer Bitcoin. I own base chain Bitcoin. I'm not going to sell it. And so in terms of who this strategy appeals to, I think is
it a young man's game?
Well, it is like maybe a young man's like slightly more risk. Slightly more risk, but risk that is not time dependent. At least if you don't take out debt, if you're just DCAing into these treasury companies, you aren't going to get liquidated. You are going to slowly over time increase your ownership of these companies that I think are very valuable, and I think will outperform Bitcoin. So I don't think that anyone should do this strategy so only buy MicroStrategy or only buy Metaplanet, or even just only own this basket. Like this is one part of my own personal
of a cohesive, let's say, overarching
includes like own Bitcoin. Just own Bitcoin. Obviously, it's the safest.
I think for me, probably the difference, at least for me personally, is more like I could kind of understand this strategy if I was like a young man, single, no kids kind of thing. Maybe it would, and I was new to but I think for me, probably the difference, at least now, I'm a 37-year-old man. I have a wife and 2 kids. I'm maybe a bit more
conservative.
A bit more conservative for good reason. Not that I'm like I'm not like at the craziest level of conservative. But I don't know. I would sort of see it more like I'd want to, quote unquote, take profit back into Bitcoin more. Like that's probably how I think about this. Maybe that's probably our main difference of kind of view on this. And maybe that's driven partly by my age. I'm a bit older than you. But I think I would want to sort of periodically take it back into on-chain Bitcoin and just, have that safety.
You don't have income taxes. You don't have property taxes. Like if I take, if I'm every year selling these equities and rolling it into Bitcoin, the capital gains is massive. Whereas in the US, when you become a holding company and you don't touch these equities at all for long periods of time, and then you like die and pass them, for instance.
Right, you're doing the buy, borrow, die thing. Yeah.
Stepped up. Right, and so from like a tax perspective, in the US, this strategy makes more sense than if you did not have capital gains tax. Then you sell whenever you want and roll it into Bitcoin. But like selling gains and paying 20% to the tax man to roll that back into base chain is really painful when on long time frames, if you just die and the tax basis steps up, you can pass that wealth generationally. That makes sense.
Yeah, and I see there's certainly this is like the typical old person.
The question is, like, I'm 32. Yeah, you're 37. You're the old man. I'm 32. I'm having kids. Like I just have a higher risk profile. But that question of like when you sell, and if you ever sell, like you would do it, shorter time frames and take profits. But the risk of this strategy increases the longer you hold the thing, right? There's more likely that MicroStrategy screws up key management and goes to zero in 80 years time than in 10 years time. And so those risks increase, but the real thing that American investors need to think about is capital gains, and it sucks.
So yeah, as you were saying, and rightly so, capital gains tax is a factor, and there's this continual compounding effect that you sort of lose out on if you are, let's say, selling assets and quote unquote taking profit back into Bitcoin. So in the end, I think it's a fair point you make there that being able to just compound, but I think at the end of the day, it is a more aggressive strategy, and I guess the main caveat would just be, can you prove it out? Can you prove out that this works even through a bear cycle? Because, it's easy to say it now in the bull market, but that'll be the real test. Like if we, do another, let's say we're at the bottom of the next bear market and we talk about this again and we'd be like, hey, Reed, how are you going on your Bitcoin Treasury Company strategy? And at that point, we'll have the answer, right?
Exactly. I'm curious to see that answer as well myself.
Well, I'll see you in 2 years or 3 years' time then, huh? No, okay. But look, thanks for joining and sharing what are, for some people, controversial opinions, but interesting for people to kind of hear some different opinions. And of course, lastly, before we let you go, any final thoughts and where can people find you online?
Yeah, people can find me on Twitter at Reed Wommack or my business email. I run a company called Groundluxe. We sell grounding sheets. You can contact me at reed@groundlux.com. And if you have ideas or think I'm a moron, please send me a DM. Because this strategy is new and fresh and helpful for people to poke holes in.
Fantastic. Well, thanks, Reed, and I'll see you around.